Hello and welcome. You're tuned in to CNBC-TV18 Prime. Let's get cracking on a brand new edition of The Big C with me, Manisha Gupta and Nigel Dsouza, your daily dose of commodities, cryptos and currencies. But what are we focusing on today, Nigel?
Well, lots to track, Manisha. But first up, before we get to what's going on in the currencies market, well, let's do a quick check on Wall Street. And let's take a look at how the indices have moved in June so far. Now, the S&P 500 is up nearly around 1% or thereabouts. The tech-heavy NASDAQ, well, that's outperformed with a gain of around 1.7%. The Dow Jones, well, it's more or less flattish for the month. Stock futures on the flip side, though, they are in the red as markets register surprisingly small moves following the US's involvement in the ongoing Israel-Iran conflict over the weekend.
It's a similar story really unfolding in the Asia-Pacific markets as largely in the trading red. Nikkei has shut shop flat while the Hang Seng is seeing some support from strength with gains of nearly 0.5%. Shanghai too closing the day with gains of over 0.6%. Back home on the Lal Street, lukewarm trade even as frontline indices came off lows. The Nifty hovering below 25,000 levels. But tell us what's happening in the currency space, Nigel.
Well, most Asian currencies are weak, but the dollar, that's the one that stands out. And that's firming up amid the rising geopolitical tensions. Now, the greenback is benefiting chiefly from the increased safe haven demand. Other safe havens as well are seeing buying, case in point being gold, as well as the Japanese yen is losing ground today. Well, oil prices have shot up after the involvement of the US in the ongoing conflict, driving up concerns that high energy prices could fuel stickier inflation as well. This, as a result, has fueled a risk-averse trade in Asia. Remember, all attention turns to the upcoming US data releases that are due later this week, including the existing home sales and the PMI figures. That's what will give fresh insights into the health of the US economy.
And shifting focus to cryptocurrencies then, where the Bitcoin fell to its lowest level since the month of May over the weekend, as rising tensions in West Asia and renewed inflation fears triggered a sharp sell-off across all of those digital assets. Bitcoin dropped below 99,000 mark on Sunday, its lowest level in more than a month, while Ether plunged 10% at one point as the digital asset market became the first to price in rising geopolitical risks. Solana, XRP, Dogecoin, all of these posted steep losses overnight, dragging the entire crypto complex sharply lower. By late Sunday, digital assets had started to recover a bit. Bitcoin is yet again now trading above $100,000, down just about 1% over the past 24 hours, while Ether has pared some of those losses off 2.5% to around 2,200 on your screens there. But time now for the latest on where the conflict between Israel and Iran stands after US attacked Tehran's key nuclear sites, joining Israel in the biggest Western military action against the Islamic Republic since 1979. The world now hawk-eyed on Iran's response. Overnight, the US, remember, the United Nations, also Security Council for that matter, convened an emergency session. Russia, China and Pakistan have proposed a resolution demanding an immediate and unconditional ceasefire. While the proposal does not explicitly name the United States or Israel, it condemns the attacks on Iranian nuclear facilities. A vote has not yet been scheduled. Remember, the resolution would need backing at least 9 members and no vetoes from the 5 permanent members: China, France, Russia and the United Kingdom and the US. The US, in the meanwhile, is obviously not sure of itself. Iran and Israel, meanwhile, continue to trade volleys of missile attacks. An Israeli military spokesperson said Israeli fighter jets had struck military targets in western Iran. As a retaliatory measure post the US involvement, Iran is now mulling the closure of the Strait of Hormuz, a critical choke point through which 1/5 of global oil, gas and supply flows. Prices of oil have shot up to peak scale back in January this year overnight. If you look at the crude oil prices, well, they're trading nearly 2% on the higher side following the US attack on key nuclear sites in Iran. The current scenario reinforcing all the forecasts for crude going as far as $100 a barrel on the higher side, and while crude could scale 3 digits in the prices as well. Well, joining us now to take all of that discussion forward is we're joined by Omar Najia. He's derivatives trader beneficiary at Gulf DMCC. Omar, hi, thank you so much for joining in. And the first question really clear out there. What do you think are the chances, percentage chances, that we could see a closure of Strait of Hormuz?
Well, I mean, if you look at something like Polymarket, which is a crypto betting market, they put the chances of closure in July at about 36%.
Hmm.
And if you look at the whole year, they put that at like just above 50%. But I think Iran has other options. If you close the Straits of Hormuz, then you are basically impacting the EU and US directly. So I think the US would take some kind of military action. I don't think that Iran would look to do that. It's not in their interest right now to close the Strait of Hormuz. I think they keep that as a trump card in their pocket. There's no need to play it right now. So I don't think the risks are very high, and not in the immediate future. I think for later, yes, but immediately, no.
All right. Hi, Omar. Good to see you in. This is Nigel on this side. Some had to say that the war is going to intensify over the weekend. And if you still have crude oil prices hovering around the $78 per barrel mark, that's telling you that maybe underlying demand actually is very, very weak because, normal cases, we would have seen crude spike up to $85, $90 as well. How do you read this? And if the strait is not going to be shut, then do you believe that crude oil prices are headed lower?
No, I think basically the trend for oil prices is higher. In the immediate term, there's a lot of very interesting discussion as to exactly what the US hit, didn't hit, the damage they caused, if they really, the way they said they did. And also, if you listen to what the US has said after the hits, we're not at war with Iran and we want it to all stop now and all this kind of stuff. If you saw Netanyahu's statement today, which is, we've nearly reached all our goals and then we'll stop. And if you look also, the foreign minister of Iran is traveling to Moscow. So again, there's no need. I think the market is kind of bullish. Uh, it is bullish, but there's no need to kind of push prices up so high unless there is something that materially affects supply. That would be like the closure of the straits, hitting of like oil infrastructure or vessels or something like that. But hitting or not hitting nuclear facilities and damaging or not damaging them, I don't think is that important. What Iran does now is going to be important. If they hit anything US, then I think you'll see the price of oil fly. If they hit any basis, you won't be able to, catch this move that's coming. But unless something like that happens, I think the market is discounting anything to do with, three whatever it is, enrichment plants where no radiation leaked and there's no video of anything. It's just, so no, the market is discounting that.
Omar, just coming back to Strait of Hormuz yet again, and Iran is not itself in a very great financial shape, would you say? And 80% of Iran's oil as well passes through Strait of Hormuz. Iran wouldn't want to disrupt that to begin with, and Iran would not want to take it up with its neighboring countries by closing Strait of Hormuz. So would you say there's a very, very, very low chance of that closure happening?
Yeah, I don't think basically, look, when you, yes, a 36% chance, but I think if you look at Iran, if you're basically threatening regime change or total destruction of the country, I don't think they care very much about, losing revenue from oil sales, right? The idea would be deterrence in closing the Straits of Hormuz, because that deterrence would involve the oil price going so high as to crash equity markets and basically make US consumers pay huge amounts of money for gasoline. And that would cause Trump political problems at home. So again, I think basically I don't think they're focused on, what their neighbors are going to think or if they're losing revenue. But I think it's like a quote unquote nuclear weapon to use if there's basically, no way out. And the US is saying, we want regime change. You're going to kill the supreme leader, all this kind of stuff. Then I think they will definitely close the Straits of Hormuz. And if the Houthis can close the Red Sea, I think the chances of them closing the, straits is high.
Okay, all right. Omar, if you could give us, an idea, according to your estimates, with playing out various cases as well. If it's shut, if the Strait gets shut, then where do you see crude oil prices move to? If
Yeah,
you could give us a level. And,
yeah. Look,
I'm in the camp that's hoping that maybe, in fact, there's de-escalation for the good of everyone, right? For the good of humanity itself. Where do you see crude oil prices settling at? If we go back to the pre levels prior to what happened between Israel as well as Iran. Yeah, go ahead.
look. I think basically, if you look at oil in the at a big scale, if you look at monthly scale, you had crude go up, WTI go up to like 130 plus after the Ukraine war. And you then had a move downwards from that 130 down to about $55 in April. I think that move is finished. That downtrend is done. So we're looking at a new uptrend of prices from 55 over the long term, I think basically to new highs. If you look at oil prices in terms of anything, if you price oil prices in gold, if you price oil prices in Bitcoin, if you price oil prices in Apple stock or Amazon stock or the Dow Jones index or whatever, oil prices are extremely low. So, and extremely low even in real terms, because if any asset has actually lost value over time in the last couple of years, it's oil. Every other asset that you can think of has gone up in price. Whether you want to believe it's inflation or whether you want to believe whatever, everything, literally everything from I don't know, from any commodity you can think of to any stock you can think of, even in US dollar terms, with the US dollar being weak. You were just saying it's like DXY is at 98%. Well, that's moved from like 110 all the way down to 98. So the dollar's losing value, and still oil prices were falling. So I think oil's future is bright. I think basically we're starting a new bull trend to the upside. And if I was looking in the immediate term, I think triple digits are possible, whatever happens with Iran this year. So I think that WTI has a very important level at about $76. And if that goes back, that's a downtrend that's been going on for at least 2 years after the Ukraine war. So I think basically, if you can break that downtrend to the upside, if you can actually close above 76, not go up to 78, then close at 75, but actually break that 76, then I think you get a lot of people, a lot of funds will close their shorts basically, and you can see this oil price really rally. The point being that I think the oil prices have been kept low for a reason. And if you want to think about it in terms of what OPEC Plus did, which is keep increasing production, keep even when the price of oil was $55, we're going to increase 400K a month. We're going to increase even more. I think they were trying to lower the price before this actual, Iran problem started. So I think the market also sees that, and it's just looking. I think the market is looking for an excuse to rally. If we can get NYMEX over $76 on a closing basis, then I think you'll see a lot of people covering their shorts. And then I think over, many, 2, 3, 5 years, I think that 130, 135 high will be in danger, will be a target, simply because of the inflation that's going to come into the market from, US spending, the devaluation of the dollar, the fiscal position of the US government, and all the debt and treasury yields, 10-year being like 4.4, going above 5 maybe. So I think higher for oil. I think cheap oil is finished for a while.
Let me counter that with the kind of supplies that we're looking at, the international markets, Omar, whether it's about OPEC, which is adding more barrels to the market, and then you have US already standing at 13.6 million barrels per day. And then the tariff impact on demand is something that we've been talking about. Just countering on what you're saying, how would you look at this higher supplies and scenario of perhaps weak demand going forward?
Okay, so in old days, 20 years ago, Oil used to be about supply and demand and physical barrels and all this kind of stuff. Right now, oil is about is financialist, right? So global oil demand is about physical is about 100 million barrels a day, plus or minus. Let's say 80 of those, 80% of that is government to government or government to refinery, doesn't get traded. 20% of that gets traded, so 20 million barrels a day, plus or minus. Futures, derivatives, those trade not 20 million, but basically massive numbers. They dwarf the physical market by at least 100 times. So oil is not about supply and demand. Supply and demand actually acts on oil when the oil market is bearish, but when the oil market is bullish, it's money flow that basically leads. So basically, people come, invest their money in oil, buy options, buy whatever. So it's that movement of money that's much, much more important than, quote unquote, supply and demand. So it's interesting that, they're going to add supply and all this kind of stuff. But in the same way that OPEC has been adding supply and added supply at $55, what did the market do? It tested that $55 again. It went 55.12, went up, came back 55.40, something like that, and then absolutely ripped to the upside. And this was before the Iran thing. And then from the Iran thing, NYMEX was trading at 65, and now we're trading like $10 a barrel higher. And don't forget that this is quite a huge market. So it takes a lot of money to actually move the market. $10 is a massive move. It's, trillions of dollars involved. So it's not like, it's not like if you trade, Doge and you buy like $1 million, you move the market. With oil, you have to spend a lot of money to move the market. But I think after the financialization of oil, futures, derivatives, hedge funds, all this kind of stuff, they have a much bigger impact than, OPEC increasing or not increasing. And if you actually look at what OPEC said in terms of increases, they say they increased like 400,000, but people who actually do counting of how much they've actually released say the level is a lot lower. Okay, so it's very interesting, and again, I think the best indicator of a market is the actual price. So if you look at the actual price and you try and analyze how that price is moving, I think it tells you a lot more than some company who's looking at a satellite and saying, 3 vessels loaded here and all this kind of stuff, because there are no more people involved. Nobody's actually going, checking. It's all done with, AI and satellites and all this kind of stuff. So I think price and how the price is moving is important, which is why I'm looking at that 76 level and why I think we're going to break it, because it's a downtrend that's been going on for 2 years. So in order to hold below that downtrend, prices have to move lower. And from where they are, I can't really see that. So we are bullish oil prices.
All right, we hear that, Omar, as you said, $55 to a new high perhaps coming in the next few years. So that's a very, very bullish, Omar. Thank you so much for that very amazing conversation, Omar. Appreciate
Anytime.
your time.
Thank
With
you.
that, thank you. With that, let's slip into a short break. On the other side, we'll be joined by Chandu Siroya. He's Managing Director of Siroya Jewelers. He joins us from Dubai on his sense of gold prices globally. Stay tuned.
Welcome back. As promised, to be joined by Mr. Chandu Siroya, who is the Managing Director of Siroya Jewelers, who joins us on the show. Hi, Mr. Siroya. Thanks a lot for joining in. Well, metals are in focus yet again. And gold, just continues its uptrend, currently holding at around that $3,400 odd. What's your take with regard to demand for gold? And also, how do you see pricing trend from here? Because the kind of move that we've seen in the last 18 months, I don't think we have seen in the last many, many years. Go ahead.
You're absolutely right. I don't think we will be seeing this move again in the next 18 months also, because all along central banks have been buying gold, and that is one of the major reasons for the gold to have gone up so much. During times of global uncertainty, gold is the only certain thing, and it is one of the most liquid asset. You can convert it to any currency you want within a minute. So that's the reason many central banks are opting for gold rather than having any other investments in their portfolio. Looking at the present market situation, today we were expecting big moves. Looking at the geopolitical uh, processes which have happened over the past 24 hours. But surprisingly, gold moved up and then it settled also down, and we are not seeing too much movement. So I think all these news are now already discounted. The markets have discounted the idea that Iran is going to be attacked. This is already attacked, but we are all waiting for to see what is going to be the next step which Iran takes. I hope good sense will prevail, as was said by Mr. Omar. I hope good sense will prevail, and we will see de-escalation soon, because it is not only for gold or for oil, but it is the stability of the entire region which is at stake right now. So I do hope we will see a little settlement. As far as the demand is concerned, at the retail level, demand is very, very low. There is financial markets demand, but physical markets, we don't see any customers in the shops. They are very low in numbers because of the uncertainty of the whole area, whether there is going to be a full-blown war happening soon, or we are going to see settlement is going to be a very, very big major influence on the demand here locally. The Dubai markets are still stable. We had a good season during the holidays, and we have the upcoming summer holidays coming here. So people do travel at that time, and they want to carry some jewelry as a gift for their near and dear ones. And as we always say, Dubai is one of the best places to buy jewelry. So there is still a demand, but it is a trickle of what it should be originally.
Mr. Siroya, so when it comes to prices, and I want to go back to your first statement that you made, that last 18 months were great, the coming 18 months maybe not so much. So is there a range that you're calculating for the next 18 months for the gold prices?
Yeah, I believe that within the next 18 months, good sense will prevail all across the world, and we will see a lot of settlement of geopolitical influences like the different wars which have been happening, all these settling down. And once all these settle down, then there is no more reason for central banks to go on buying gold. They have to look for different investments. So that central bank buying may also ease, and if that eases, then the gold prices will stabilize. I do believe that we will see gold crossing $3,500 this year, but whether gold will cross 3,500 and $4,000 is a challenge. You see, such big news as was happened yesterday also did not move the market much. So I believe that other than the central bank buying, there is not much buying in gold, and the cost of holding is also very high right now. But yes, if the interest rate goes down, then maybe we might see a spike in the position for people to hold gold and try to invest again. But right now, the interest rates are high, and the cost of holding a position is very high, and that's a deterrent to the markets.
Clearly. Mr. Surya, the other thing, and as you mentioned, is what everybody else seems to be telling us as well, that there is no physical buying. The hedge funds haven't bought gold overnight, even as there are geopolitical tensions. And markets believe that we perhaps will see a run-up in crude, didn't happen. Run-up in gold did not happen. So it perhaps is the lack of buying in the markets itself. How are you then looking at investments happening within this space? Physical buying is not happening. You said that clearly has been on the weaker side. What is it that people are buying within the precious metals? Is it silver? Is it diamonds? What is being bought?
You see, as a jeweler, we always try to sell diamonds because that is where we make a little margin. And the
Okay.
gold jewelry, the margins are very, very limited. So, you see, if somebody wants to diversify their portfolio from any other investments to something which is very liquid, then I would always say gold is one of the best investment. Keep on investing in gold. Right now, we are seeing some interest in platinum. A lot of jewelers are trying to make jewelry in platinum because platinum is, as a perceived value, it is higher than gold, but it is almost half the price of gold. And jewelry is very attractive. Instead of white gold, we can have platinum jewelry. So we are seeing a lot of interest in platinum jewelry happening.
When it comes to diamonds, as you said, that demand seems to be picking up. I mean, the way we saw 2023 and 24 were not so great years for diamonds. Would you say 25 stands slightly tall, better?
I do believe, yes, we will see a lot of, you see, when you compare now the cost of the diamonds to the cost of the gold, the difference is reducing. So people would like to invest in something which is of intrinsic value, which is gold, and also adorn it with the most beautiful stones on earth, which are diamonds. So yes, I do believe that the demand for diamond jewelry will be going up this year. There is a lot of competition from lab-grown diamonds, but natural is natural, and whoever wants the other variety can always opt for the better or the cheaper version, better in terms of pricing, but the cheaper version of the lab-grown diamonds. I do believe there is a lot of awareness which is being created by the jewelry fraternity worldwide, and this will pay off in good sales of diamond jewelry. Diamond also in India is, there are many groups which are offering 100% buyback from the diamonds also. So that is also a very big boost for the diamond jewelry markets.
Very quickly, sir, before we let you go, I think you said platinum, the demand is there, right? And those prices as well have hit the highest, I think, in the last 10, 12 years.
Yeah.
How do you see those prices moving? On gold, I think you mentioned around $3,500. What about platinum?
Mhm. I think platinum, you see, both the metals, according to me, is not going to move much further if the central bank buying is not there. And gold has been following the geopolitical situation worldwide. As soon as that settles, it will settle down. And platinum also is, when the demand increases for platinum jewelry, it might increase a little bit, but I don't see it jumping 10, 20, 30%. I think we are range bound in these ranges only where we are presently. We might see a 5% up down movements if the geopolitical influences are taken away.
All right, so the price, it's good to buy into precious metals as they are glittering right now, but not as much. But a range-bound move perhaps will bring the retail markets back, at least is what the belief is. Because at this point in time, the prices are volatile and the retail is missing. Mr. Siroya, as always, thank you so much for your time. Thank you for joining in. Well, that's a view coming in for the precious metals as well. But with that, that's all the time that we have on the Big C. Thank you from me and Nigel. Until tomorrow when we bring you more news, more updates.